Welcome to the deep dive. We're diving headfirst today into Bitcoin mining, specifically what it looks like in, well, 2025. Forget that sort of romantic image of a lone coder striking digital gold in their basement. The reality now seems different. A high-stakes race, serious hardware, massive energy bills.
That's absolutely right. It's really evolved. What started as, this decentralized experiment anyone with a computer could join, it's now a pretty sophisticated global industry, dominated by players with specialized gear and, crucially, access to very cheap power.
Okay, let's maybe take a step back for a second. For anyone maybe newer to this, what is Bitcoin mining? Like fundamentally?
Sure. So at its core, Bitcoin mining is how new transactions get validated and added to the Bitcoin blockchain. That public ledger that keeps everything transparent and secure. It's also the process that introduces new Bitcoins into circulation.
And how does that happen? The validation part.
Miners compete. They use powerful computers to solve these incredibly complex cryptographic puzzles. The first one to find the solution gets to bundle the latest transactions into a new block, added to the chain.
Ah, okay. And there's a prize for winning this digital race.
Exactly. The winner receives the block reward. After the halving in April 2024, that's now 3.125 Bitcoin per block. Plus, they also collect all the transaction fees that people paid to have their transactions included in that block. This happens roughly every 10 minutes. It's the heartbeat of the network, really.
Got it. So our mission today is to kind of cut through the hype and figure out what mining really involves in 2025. And maybe the big question, is it even feasible for, regular individuals anymore? Sounds like maybe that ship has sailed.
That's a very good way to put it. The landscape has shifted dramatically. What you could genuinely do on a home PC years ago, well, now it requires serious investment, serious infrastructure. We need to see if there's any room left.
Right. So let's talk gear, the tools of the trade. Can I still fire up my gaming PC and start mining Bitcoin?
Afraid not. Those days are long gone. The sheer computing power securing the Bitcoin network now, the hash rate, is just astronomical. Mining profitably with a standard computer or even a high-end graphics card, it's completely unfeasible. The math just doesn't work.
Okay. So what are people using them? What's the essential kit for serious mining today?
We're talking about ASICs, application-specific integrated circuits. Think of them as hyper-specialized computers designed to do one thing and one thing only. Perform the SHA-256 calculations Bitcoin uses incredibly fast and efficiently. They blow general-purpose CPUs and GPUs out of the water for this specific task.
ASICs sounds expensive, are they?
Oh, yeah. Definitely not cheap. A single modern ASIC unit, you're looking at anywhere from hundreds to more likely several $1,000s. We're talking models like the Bitmain Antminer S21 Hydro or the MicroBT WhatsMiner M56 plus Canon's Avalon series. These are serious machines, and, to actually be competitive, miners often need lots of them, whole farms of these things.
Wow, okay. That's a hefty upfront investment. And I imagine, like all tech, this stuff gets outdated pretty quickly.
You hit the nail on the head. Rapid obsolescence is a huge factor. Newer, faster, more energy-efficient ASICs are constantly coming out. So today's top-of-the-line machine might be significantly less profitable or even unprofitable in just a year or two. It forces this constant cycle of reinvestment just to stay in the game. It's a hardware arms race, essentially.
A relentless cycle. Okay, let's shift gears to what you mentioned earlier and what seems like maybe the biggest factor. Electricity.
Ah, yes, the elephant in the room, or maybe the power plant in the room. This is, without a doubt, the single most critical factor. It often determines everything. These ASICs, they are incredibly power hungry. For almost any miner, electricity is the biggest ongoing operational cost. Profitability basically lives or dies on finding cheap power.
So geography matters a lot.
Hugely. Access to cheap power is probably the most valuable asset a miner can have.
I saw some figures about the average cost globally to mine one Bitcoin. What are we talking post-halving?
Yeah, estimates put the global average somewhere around $35,000 to mine a single Bitcoin now. But, and this is a big but, that average hides massive variations. It completely depends on your local electricity price.
Can you give us a sense of that range, like the best versus the worst?
Sure. So in places with really cheap power, maybe it's subsidized, maybe it's abundant hydro or geothermal, think parts of Iran, maybe Venezuela, Iceland, some areas in rural China, you might see cost as low as, say, 3 to 5 cents per kilowatt hour. Now contrast that with somewhere like Germany or maybe California, where you could easily be paying over 10 cents, maybe 15 cents per kilowatt hour or even more. That difference, it's night and day for a mining operation.
So where you plug in is almost more important than what you plug in.
In many ways, yes. It dictates your operational expenditure, which is key. That's why you see these huge mining companies setting up shop very strategically in places with long-term cheap power contracts. For an individual thinking about this, you have to use one of those online mining profitability calculators, plug in your exact electricity cost, and see if the numbers even remotely make sense.
Okay, so assuming someone does find cheap power and invest in the hardware, how do they actually, mine? Do they just switch it on and hope?
Well, you could try mining solo. Just point your ASIC at the network and hope you're the lucky one to solve the next block. But honestly, in today's environment, with the massive global hash rate, your chances of finding a block on your own are infinitesimally small, like trying to win the lottery, maybe even harder.
Right. Doesn't sound like a reliable strategy. So what's the alternative for smaller players?
Mining pools. That's the standard approach now. Pools are basically groups of miners who combine all their computing power, their hash rate, together. They work collectively to find blocks. When the pool does find a block, the reward, the 3.125 Bitcoin plus fees, gets shared amongst all the pool members. It's proportional to how much hashing power each person contributed.
Ah, okay. So you get smaller but much more frequent and predictable payout.
Exactly. It smooths out the randomness. Instead of a tiny chance at a huge reward, you get a steady stream of smaller rewards.
Are there established pools people use?
Oh yes, plenty of large, reputable pools. F2 Pool, Ant Pool, Slush Pool are some of the big names. They typically charge a small fee for coordinating everything, usually somewhere between 1% and 3% of your earnings.
Makes sense. Are there any downsides to pool mining?
Well, the main concern that often comes up is centralization. If just a few large pools control a really significant percentage of the total network hash rate, it does raise questions about potential risks to Bitcoin's core principle of decentralization. It's a trade-off. Pools make mining accessible, but concentrate power.
That's a really important point. Okay, beyond the big costs, hardware, electricity, what else? What are the hidden costs or practical headaches of running miners?
Several things people often underestimate. First, ASICs generate a lot of heat and an incredible amount of noise. We're not kidding about the noise. It could be like having a vacuum cleaner or even, a small jet engine running constantly. So you absolutely need robust cooling solutions. Ventilation is key. And maybe soundproofing if it's anywhere near living spaces.
A jet engine in the living room? Probably not ideal.
Definitely not. Then there's maintenance. These machines run 24/7 under heavy load. Hardware failures happen. Fans die. Power supplies burn out. You need to be comfortable troubleshooting, maybe replacing parts. It requires some technical know-how.
And regulations.
Ah, yes. Regulatory risk is real. Some countries have banned mining outright. Others impose heavy taxes. The legal landscape can change, and that can obviously impact your operation significantly.
Right. And we mentioned the halving earlier. Let's just circle back to that. The reward got cut in half in 2024. How big of a deal was that?
It was huge. It happens roughly every 4 years. It's built into Bitcoin's code. The block reward dropping from 6.25 BTC to 3.125 BTC, that instantly cuts miners' primary revenue stream in half. Overnight, it really squeezes margins, especially for anyone who already had high operating costs or older, less efficient hardware. It forces efficiency.
Okay, so putting it all together. Expensive, rapidly aging hardware, massive power bills, intense global competition, lower rewards. What's the verdict for an individual wanting to mine from home in 2025? Is it profitable?
Look, for the vast, vast majority of individuals, direct home mining is almost certainly not going to be profitable. The upfront capital needed for competitive hardware, the ongoing electricity costs, unless you have incredibly cheap power, the sheer scale of competition. It's just too much for most people to overcome.
Are there any exceptions, any edge cases where it could work?
Maybe. If you genuinely have access to virtually free or extremely cheap sustainable energy, like maybe excess solar you can't sell back to the grid, or some unique local situation, the math might work then, but it's rare. Or, some people do it purely for educational reasons, to learn hands-on, but they accept they'll likely lose money doing it.
And the big industrial farms, are they still making money?
Yes, generally. The large-scale operations have economies of scale. They buy hardware in bulk, negotiate extremely low electricity rates, often below commercial rates. Their cost to mine a single Bitcoin might be down around, say, $26,000 to $28,000. So with Bitcoin's price above that, they're still profitable. And interestingly, many are diversifying, using their infrastructure for things like AI data centers, too, to maximize returns.
So if direct mining isn't really the way for most of us, what are the alternatives if you want exposure to Bitcoin?
Well, the simplest way is just buying Bitcoin directly. on an exchange,
Yeah.
buying and holding it as an investment. Another route is investing in publicly traded Bitcoin mining companies. You're buying stock in the companies doing the mining rather than doing it yourself.
What about cloud mining? We saw that mentioned. Renting hash power.
Ah, cloud mining. Yeah, it sounds appealing. Pay someone else to mine for you, no hardware hassle. But honestly, that space is notoriously full of scams and operations with very questionable returns. It's often opaque, fees can be high. We'd strongly advise extreme caution there. Really do your due diligence, and even then, be skeptical.
Okay, good warning. Maybe steer clear. Any other crypto alternatives for earning rewards?
Yeah, if you're looking to earn yield in crypto, staking might be a lower barrier option. For proof-of-stake coins like Ethereum, Solana, and others, you can lock up your coins to help secure the network and earn rewards. It's a different mechanism, generally less energy intensive, and requires less specialized hardware.
Got it. So, given how tough mining is, why do people still do it if it's not always about pure profit?
That's a great question. For some, it really isn't just about the immediate profit. There's a segment of miners who are deeply committed to Bitcoin's philosophy. They mine to contribute hash power, to help secure the network, to support its decentralization. It's almost ideological for them. For others, it's a very long-term play. They see mining as a way to acquire Bitcoin at potentially below market cost, betting that the price will significantly appreciate over many years. A long-term hedge. And as one source pointed out, there's just something appealing about earning Bitcoin directly from the protocol itself, participating in its creation.
That makes sense. It connects you to the core process. Okay, so wrapping up our deep dive on Bitcoin mining in 2025, final thoughts.
I think the key takeaway is that Bitcoin mining today is serious business. It's capital intensive, it's high risk. It's really best suited for those who have that magic combination. Access to very cheap power, significant technical expertise, deep pockets, and a strong long-term conviction in Bitcoin. For the average person, probably not the path to riches it might have once seemed.
So the absolute crucial advice is,
Do your homework meticulously. Research everything. Run the numbers using realistic assumptions for hardware costs, electricity prices, pool fees, network difficulty. Understand all of the risks involved before you even think about spending a dollar or a watt of power. And yeah, be aware of the ongoing environmental discussions too. Though it is good to see the industry moving towards more renewable energy sources.
right. So whether you're thinking about mining or just investing or even just using Bitcoin, understanding this mining process, it really helps demystify how it all works, doesn't it?
Yeah.
Shows its resilience.
Exactly. Understanding the engine helps you appreciate the car. And ultimately, whether you decide to participate directly in securing the network or engage with Bitcoin in other ways, having this grasp of the underlying mechanics gives you valuable insight into this whole evolving digital economy. It kind of makes you think, what role might you want to play in all this, if any?